Welcome back. So now we'll be solving the second question of the same exam, and that was October-November 2020 paper 22. Now this question is related to club accounting, and club accounting is that topic which students usually find a bit tricky. But if you are aware of the formats that are used in this topic, for instance the trading account, the income and expenditure account, the subscriptions account, and what does the subscriptions in arrears or the subscriptions received in advance represent, whether the amount that is debited in receipts and payments account for subscriptions is the same amount that goes in the income and expenditure account or not. So once you are clear about all these things, you trust me, would really enjoy this topic, right? So let's begin. Now the question says, B.H. Sports Club provides sporting facilities and a cafe for the use of its members and guests. Very good. The club's financial year ends on 31st of July, right? So this is the year end, which means that the year start would be 1st of August. The following information is available. Now we have the information related to the assets and liabilities of this club at 1st August 2019 and at 31st of July 2020. So this is what? This is the opening balances and these are the closing balances given to us. Very good. And in this we have the bank balance, the cafe inventory balance, sports hall at book value. Very good. Insurance prepaid, which represents for sports hall and the sports equipment opening and closing balances. We have the sports equipment at book value, which means what? At net book value. And subscriptions in arrears, subscriptions received in advance, and wages accrued of cafe staff. Okay, so before reading further, let's first identify that which items will become part of which account. So bank we know will become part of statement of financial position. If we are asked to construct the SOFP, then it will be an asset for this club. Then we have the cafe inventory. So cafe inventory, first of all, it goes in the statement of financial position, the closing inventory, but it also becomes part of our trading account, the cafe trading account. If it is asked in the requirements, then we know that opening inventory will be added and closing inventory will be subtracted while we are calculating the cost of sales, right? So it is very important that while reading question you start annotating the question as well. Then we have sports hall at book value. So this is again what? At net book value, and this is a non-current asset. So we know that if we have to prepare the statement of financial position, this will be shown under non-current assets. But another adjustment related to the sports hall could be its depreciation, right? And sports hall depreciation will become part of what? It will become part of your income and expenditure account, right? Not your cafe, but your income and expenditure account, which is because this is not directly attributable to the cafe expenses. Then we have insurance prepaid. So insurance is again an expense. This we also know that it will go in your income and expenditure account. Then we have the sports equipment at book value. So yeah, again, since this is a non-current asset, if we have to prepare the statement of financial position, then we'll take this asset over there. But another adjustment of this would be in the income and expenditure account for its depreciation, right? Then next we have the subscriptions in arrears, subscriptions received in advance. Now this is very important information, that if you have to prepare the subscriptions account, then we will definitely be using these balances to calculate the subscriptions earned during the current year. And lastly we have wages accrued of cafe staff. So this is a directly attributable expense to the cafe, and we know that if we have to prepare the cafe trading account, then we will take this expense over there, right? Of course, after adjusting the balances opening and closing. Then next we are given with another important information, and that is receipts and payments account, which is just like a bank account for a club, but the name is receipts and payments account. So on the debit side we have the opening balance. Very good, 840. This is the same balance which was given for bank. So yeah, 840. Then we have the subscriptions received during the year. Now what does this amount represent? 9960. This represents all the subscriptions that are received during the year ended 31st of July 2020. Now this amount will include the subscriptions for the current year. This amount might also include the subscriptions that were accrued last year, and that was how much? It was 360, right? And this amount might also include the amount for subscriptions which will be earned in the next year, which is what? The subscriptions received in advance. right? So please understand this, that the amount shown in the receipts and payments account for subscriptions is not always the subscriptions earned during the year, which is the subscriptions which belong to the current year. No, you have to calculate that value, right? And we'll be doing that in a while. Then we have the cafe taking. So this is what, just like the cafe sales, right? So, and this will go where? In your trading account again. Then on the credit side, we have the purchases of cafe supplies. So purchases will go where? Again in the trading account. So far we have how many information related to the trading account? We got the opening and closing inventory for trading account. Then we also got the wages, directly attributable expense to the cafe. Then cafe sales, that is takings, and the purchases related to cafe as well. Very good. Then wages of cafe staff that were paid during the year. So again this will go in your trading account. Then wages to the sports staff. Now this will go where? This will go in your income and expenditure account. Now this is another expense for the club, so this will go in your other expenses statement, that is income and expenditure account. Then we have the insurance, so we have to adjust this figure as well, income and expenditure account. This is the amount which is paid for insurance during the year, and the amounts that were given above for assets and liabilities were the opening and closing balances, right? So these were the prepaid balances. We have to adjust these figures to calculate the insurance that is actually incurred for the current year. Then we have the sports equipment, right? So there is sports equipment which is purchased during the year amounting to 2100. Very good. Sports hall expenses, these are again other expenses. They will go in your income and expenditure account, and the closing balance is 1270, same as the one given above. Very nice. Then in additional information, we are also told that sports equipment is depreciated at 10% per annum using the reducing balance method, right? So we have to calculate, we have to charge depreciation for the current year, right? Because we were not given the closing balance, but now we know that the opening balance was 3900. There are some purchases during the year for sports equipment amounting to 2100, and then we will be calculating the depreciation on the accumulated figure, right? So very good. Now let's read the requirements. Part A says, prepare the subscriptions account for the year ended 31st of July 2020, first part. Then balance the account as well and bring down the balances on 1st of August 2020. So we have the format over here. Okay, so let's begin. Now the year start was what? The year start is 1st of August 2019 and the year end is 31st of July 2020. So let's write that timeline first. 1st of August 2019 and 31st July 2020. This means that your opening balances will be in 2019. Now let's see in your assets and liabilities portion that what were the balances, what were the opening balances for subscriptions. Here are the subscriptions in arrears. We have $360 as an arrear, right? Opening arrears we have, but we don't have any prepaid balance brought down for subscriptions. We just have the arrears opening figure, and that is 360, right? So now what does this balance represent? Should I write this balance on the debit side of the subscriptions account or on the credit side of the subscriptions account? Subscriptions and arrears represent assets, right? Subscriptions is an income for the business. Let me just first show you the format of subscriptions account. Yeah. So subscriptions are what? These are received by the clubs or the societies from its members, and it is an income for the club, of course. These can be accrued or they can be received in advance, and these are debited in the receipts and payments account because this is an income for the business, for the club, and this is shown under your incomes heading in your income and expenditure account, and this is the full format of your subscriptions account. Now if there is an opening balance brought down on the debit side, it will represent your current asset because since it is an income. If an income is accrued, this means that it should have been received in the previous year but it was not received and you have earned it. So this means that it will become your asset for the next financial year. And vice versa, if there is a prepaid subscription, right, you have received an income in advance but you haven't earned it yet, you will be giving the service in the later period. So this will represent your liability, right? And whatever is received in the current year for subscriptions, whether it is the accrued figure, the prepaid or the current year subscription, that will be debited in your receipts and payments account and it will be credited in your subscriptions account, right? Because all the incomes, once they are received, they are credited in their own account. And if there are some closing balances, then we will be adjusting that as well. Balance carried down will be on the credit side because it will again represent an asset. So, current assets have balances carried down on the credit side, and if it is a prepaid balance CD figure, so that would be on the debit side because liabilities have balances carried down on their debit side. Now, once you have adjusted these figures, the balancing figure, usually the balancing figure will be left, and that will represent your income and expenditure account figure, which is actually the subscriptions which you have earned in the current financial year, right? These are the subscriptions which belong to your current financial year only, right? So, receipts and payments account are debited when the subscriptions are received and your subscriptions account is credited, and your income and expenditure account is credited because all the incomes are credited in your income and expenditure or your income statement, and your subscriptions account will then be debited to show this as an adjustment, right? So, this is how we prepare our subscriptions account. Now, keeping this format in mind, let's prepare our subscriptions account. So, we know that the year start is 2019 and the date was 1st of August, right? So, on August 1st, there is balance brought down, which is actually the accrued subscriptions figure, and this was supposed to be received in the last year, but it was not received. So, this has now become a current asset. Balance brought down on the debit side amounting to $360. Now, since there is no other balance brought down for the subscriptions received in advance, you will now change the year, and that would be year 2020. Now, the remaining adjustments or the remaining entries will be on the last date of your financial year, and that is July 31st, right? Now, first of all, we have the accrued and prepaid, again the closing balances. So, this is again an asset, but now since this is the balance carried down figure, it will appear on the credit side, and subscriptions received in advance. So, these are the subscriptions that are already received, but you haven't earned it yet. So, this is your liability, and its balance carried down will be on the debit side now. So, let us first write down our closing balances, right. So, on July 31st, there is a balance carried down, which is actually the subscriptions accrued, right, at the year end, and this is how much? This is 720, and on the same date, again there are some prepaid subscriptions from some members. So, this is how many? This is 120, right. 120 received in advance, 720 accrued. Now, we are done with all of these balances for the subscriptions. Now, let us move to our next piece of information, and that was receipts and payments account. So, for subscriptions, we were given the subscriptions that are received during the year. These are not the subscriptions earned during the year, because it might represent subscriptions accrued last year. Now, the subscriptions are being paid in the current year. This amount will also include the subscriptions received in advance in the current year, but will belong to the next year. So, this is what subscriptions received during the year. What will be the double entry of this transaction? Your receipts and payments account is being debited with 9960, and your subscriptions account will be credited with the same figure. So, this will be shown on the credit side of your subscriptions account. Receipts and payments, 9960, right. Now, is there any other information related to subscriptions? No. If there are any bad debts, then we know that bad debts, since it is an expense, so bad debts will be debited and your subscriptions account will be credited. So, lastly, we just have to now balance this account. Now, on the credit side, the total would be 9960 plus 720 will be 10680, and we know that there is a shortfall on the debit side by how much? 10680 less 120 less 360, and that would be $10,200. Now, this is what? This is the amount of subscriptions which is actually earned in the current financial year, and that will go in your income and expenditure account. So what have we done so far? We have prepared the subscriptions account, we have balanced it as well. Now lastly, we just have to bring down the balances for the next period, and that would be, the year end was July 31st. Now the next date would be August 1st, the same year 2020. But the same calendar year, but the next financial year, of course. So balance brought down. On the debit side will now become the 720 that was accrued last year, and same date August 1st, balance brought down 120, right, and then you will have your 6 marks. Now let us move to next part, which says calculate the cafe profit for the year ended 31st of July 2020. Now everything related to cafe will be used to calculate the cafe profit for the current year. So for that, you should now again be knowing the format for calculating cafe profit or loss. Let me show you that as well. So cafe, sometimes it's a cafe, sometimes it's a shop, or there is a bar as well, for which we prepare a trading account, and it is prepared to calculate the net profit or loss from the shop, from the bar, or from the cafe, which is earned through buying and selling of goods. And all the information that is related to cafe or shop will become part of your trading account. And this is the format that first of all we take the sales or the cafe takings or the sale of refreshments, whatever the name is given to you. Then we subtract the cost of sales from the sales figure, and for that we use the opening inventory given to us in the balances, of course, the purchases during the year. We subtract the closing inventory, then we'll have our gross profit. And if there are other expenses related to the cafe, for instance, sometimes there is depreciation, sometimes there are any repairs, rent, or the wages, we will be taking that and we will be subtracting it from the gross profit, so that we have our profit or loss from the trading account or from the shop that we are operating in our club, and then we will be taking that to our income and expenditure account, right. So keeping this format in mind, let's prepare or let's calculate our cafe profit during the year. So we will start from what? We will first be writing the cafe takings, right, and that will be found in which statement, in which information? This was given to us in the receipts and payments account, cafe takings. These are all the sales in the current year, and these are 13,520. Let's write that down in the second column. Then we will subtract cost of sales, right, all the directly attributable costs. So first, starting from the opening inventory of the cafe, this was given to us, and this was how much? In the assets and liabilities information, cafe inventory opening was 520 and closing is 770, right. So opening inventory will be added, closing inventory will be subtracted, and we know that in between these two figures we add purchases of the inventory during the year as well, and these will be found in our receipts and payments account, right. Purchases of cafe supplies amounting to 8190. The same format that we use in while preparing income statement for any other business, sole trader, partnership, company accounts, the same format will be used to prepare the trading account for a club, right. Opening inventory plus purchases less closing inventory. So in this question we have purchases amounting to 8190. So 8190 will be added. Then our cost of sales will be 7940. This will be subtracted, and then we'll have our gross profit amounting to 5580. Right. Lastly, if there are no expenses related to the cafe, then that's it, that is your answer. But in this question we have, right. So we'll be subtracting the other expenses related to this cafe less other expenses, and you remember what was that expense? These were the staff wages of the cafe, right. Okay. So staff wages that are paid during the year is 2750. The other wages are related to the sports staff. So 2750 is paid during the year to cafe staff. However, you cannot take this figure right now, right, because there is some accrued balances as well. opening and closing as well. So let's do an adjustment for that. 2750 is what this is paid during the year, so of course this will be taken into account. However, $60 was accrued in the beginning, right? So this means that this should have been paid last year, but this was not paid last year. It was however related to last year, but this is being paid in the current year. Being paid in the current year, this is included in 2750. So what should I do? Should this become part of my current year's cafe staff expenses? No, it will not, because this was related to last year. This is being paid in the current year. This was an accrued opening balance and this represented my liability. Right, so I am paying off this liability in the current year, but it does not belong to current year. So $60 will be subtracted from 2750. Okay. Then the other balance, this is $80 closing, right? This is a closing accrued balance. Now this represents what? This represents that $80 were supposed to be paid in the current year ending 31st July 2020, but this remained unpaid by the year end. However, it belongs to current year. So this is again a liability, and this is not included in 2750 because this is accrued. However, it relates to current year. So this means what? Should I add this $80 in 2750 to show the total amount incurred for cafe staff? Yes, $80 will be added because they relate to current year. So 2750 is paid during the year for cafe staff wages. However, $60 related to last year, these will be subtracted, adjusted, and $80 which were supposed to be paid but are not paid will be added. Right. So just like in income statement, we adjust all the accruals and the prepayments to show the incomes earned or the expenses incurred in the current year. Same thing we will be doing for while preparing trading account for a cafe or for the club as well. Right. So the total of this expense would be 2770, which will be subtracted from the gross profit. So that we have our cafe profit for the year, and that would be 2810. Right. We will be taking this profit in which statement? In our income and expenditure account, because in income and expenditure account we show all the incomes from all the sources, right, whether these are from subscriptions, from donations, from the cafe profit. So now let's move to part C. Part C says prepare the income and expenditure account for the year ended 31st of July 2020, and then again you will have your format. So again let me just show you its format quickly. That okay, what is an income and expenditure account? It's just like an income statement. The difference is only for the terms used. Of course, we use income statement for sole traders, partnership, company accounts, but for a club we use incomes and expenditures account, and it shows the final figure that is calculated is either a surplus. In place of profit we use surplus, or a deficit, which is a loss for the current year. And so again, since all the incomes and expenditures are shown in this statement, before taking the incomes earned or the expenses incurred in the current year, we have to adjust them if there is a need, right? And this is how we prepare our income and expenditure account. First we show all the incomes in the first column. The incomes could be your subscriptions earned during the year, of course. Yeah, if there are any donations, profit from the shop, if there is any competition fees, the entrance fees, match tickets, etc. And expenditures will include your again wages of the club staff, your any other general expenses, your rent, depreciation, electricity bills, if there is any interest on loan, or if there is no loss on the sale of a non-current asset, or if there is a loss from the shop or cafe, so that is also shown in your expenditures. And then in the end you will have either a surplus or a deficit for the current year, right? So let's start preparing our income and expenditure account. First of all, there will be incomes. So do you remember how many types of incomes are there in this question? First of all, we calculated subscriptions, right? So subscriptions is an income. Now which figure should I take for subscriptions in my income and expenditure account? Yes, this figure, right? The one that we calculated, the one that was the balancing figure, and that is $10,200. So first income is our subscriptions. Then next income is our profit from the cafe, right? So cafe profit, another income, 2810. right? After subtracting all the expenses from the cafe takings, this is the profit from cafe. Now, are there any other incomes in this question? Did we read anywhere that there are some donations or there were some competition fees or ticket incomes, etc.? No, right? No. So, that's it, and these are the two incomes that we have. So, let us total this. The total of these two will be 13,010. Now, let us move towards our expenditures, and we have a lot of expenditures for the club in this question. So, let us start from the beginning of this question. First of all, we have bank, that is not an expense. Cafe inventory, we have already dealt with that in the trading account. Then we have the sports hall at book value, and there we, in the beginning, we concluded that of course its depreciation will become part of income and expenditure account, right? So, the opening figure was 17,000 and the closing figure is 16,560. So, it has been reduced by the year end, right, and the difference represents your depreciation. So, the first expenditure is sports hall depreciation. Let us write that down. The opening value was 17,000, the closing figure is 16,560. So, the difference of 440 will represent your depreciation. Then next expense, right, we have now done with this. Insurance is the next expenditure, and for insurance we know that there is some opening and closing balances, and that is what the insurance prepaid. Okay, so insurance is an expense, we know very well, and if insurance prepaid, we have the opening balance. What does this represent? That $400 was paid last year, however it was supposed to be incurred in the next year, right, in the current year for which we are preparing our income and expenditure account. But however it was paid last year, since it belongs to current year, it should become part of my current year insurance expense, right? So, it will be added. And 440, again a prepaid insurance expense. This represents what? This represents that it will be incurred in the next year, but it is being paid in the current year. So, it does not relate to my current year. So, therefore, it will be subtracted from the figure that is paid during the year for insurance, and that is how much it is, 1430, right, being credited in your receipts and payments account. So, once again a quick recap, 1430 is being paid in the current year. It includes 440 which relates to next year. So, we will be subtracting that, and it does not include 400 which although paid last year, but it belongs to current year. So, we know that in income and expenditure or in income statement, we take all the expense that belongs to current year. So, that is why in 1430 we will be adding 400 because it is related to current year, and we will be subtracting 440 because it is being paid in the current year, but it will be incurred in the next year. So, let us write that down. So, insurance which relates to current year is only 1390, right. Now, moving on to our next expenditure. So, the next expense is sports equipment at book value. Okay, so sports equipment, this is a non-current asset and we have its opening value, but we don't know the closing value yet. However, we are told that there were some sports equipment purchases in the current year, and that is how much it is, $2,100. Sports equipment, $2,100. Now, how do we charge depreciation if we are told that it is being depreciated using the reducing balance method at 10%? We know that under reducing balance method, we charge depreciation on the net book value, right, and that is what? Cost less accumulated depreciation. But in this question, we are not given with the cost or the accumulated depreciation. So, how should we charge depreciation? We are given with the net book values, right. So, this is good. You don't have to go in these long calculations. You are not given with the cost, you are not given with the accumulated depreciation. So, very good, celebrate it because you are given with the net book value. So, just take this figure as it is because accumulated depreciation has already been subtracted, $3,900. Add the purchases during the year. Of course, since this is the new asset, its depreciation will be on its cost. So, add this figure in the net book value for the old equipment, and then just charge depreciation at 10% on the accumulated figure. So, let us do that. So, the total depreciation on these two assets, the old one and the new one, will be $600, right. Please do not get confused during the exam that there is no cost, there is no accumulated depreciation. Be very clear that you are given with the net book values. So, just charge depreciation on the figure that is given to you as it is, right. We are done with this as well. Subscriptions we have already used, and the cafe staff wages are already there in the trading account. So, do not add that again in your expenses. Then any other expenses on the credit side of the receipts and payments account. Purchases of cafe supplies, we have used that in the trading account. Cafe staff wages has already been used. Wages of sports staff. So, sports staff amounting to 5220. Now, the balances were not there for sports staff wages, right, for the opening and closing balances were not there. So, this means that there is no accrued or prepaid problem for this expense, but since it is an expense, so we will be taking that in the income and expenditure account as it is, right. So, sports staff wages 5220 will also become part of your expenditures. Then, so insurance is already done, and sports equipment depreciation has already been calculated, and lastly we have sports hall expenses amounting to 3360. This is also an expense and there is no accrued or prepaid balance for that. So, we will be taking this expense as it is in our income and expenditure account, 3360 for sports hall expenses. So, now are there any other expenses in this question? We have taken the sports staff wages, the insurance, sports equipment depreciation, sports hall expenses, and sports hall depreciation as well, right. Cafe inventory or the purchases of cafe supplies or the wages of cafe staff are already there in your trading account. We have already added, subtracted that, and so please do not use that again in your income and expenditure account. So, now let us total our expenses, and that would be 11,010. So, these will be subtracted from your total incomes amounting to 13,010, and then you will have your surplus. Very good. So, there is a profit, and you can say that there is a surplus for the year, just like we write profit for the year. So, surplus for the year for this club. Very good, amounting to $2,000, and then you will have your 7 marks. So, be very clear that what incomes become part of your income and expenditure account. The subscriptions amount which is earned during the year, and that is debited in your subscriptions account and credited in your income and expenditure account, because all the incomes are credited there. And then your profit from cafe and the other expenses that relate to the club as a whole and not to the cafe in particular will become part of your expenditures. Last two parts, theoretical parts. Part D says, state what the balance on the BH Sports Club accumulated fund represents. Now, what is accumulated fund? We know that accumulated fund is the term used for capital, right. And we know that what is capital? Capital we know is all the assets less liability what the club actually owns, right, after the liabilities have been subtracted from the assets of that club. So, this is a name used for capital for a club, and that is accumulated fund, right. And just like any other business, since the profit for the year is added to the capital to show that by how much it has been increased, that represents your capital carried down figure. Similarly, all the surpluses are also added in your accumulated fund balances to show that by how much it has been increased. So, if you have to state that what the balance on BH Sports Club represent, you will be writing that for 1 mark. So, let us write that down, right. You can say that accumulated fund is the capital for a club, and it represents, or its balance represents, the surpluses accumulated or the surpluses earned, right. Any two of these words you can use. The surpluses earned over the years since this club came into being, or since the club had started making surpluses. So, the balance of accumulated fund represents first the capital that was raised by the club and all the surpluses that are added to that figure. Then the next part says, state the effect that the surplus or the deficit on BH Sports Club's income and expenditure account for the year ended 31st July 2020 will have on the accumulated fund, right? What is it asking? The question is saying that what effect will this surplus 2000, or if there is a deficit in any year, how will it affect the accumulated fund, right? So, as we have discussed that if there are any surpluses in a particular year, they are added to your capital or to your accumulated fund, and if there are any deficits, so they are subtracted from there. So, a deficit decreases your accumulated fund and your surpluses increase your accumulated fund, right? So, that we will be writing for 2 marks, right? So, surplus of 2000 will increase the accumulated fund by $2,000. If you want, you can write about the deficit as well, that if there is a deficit, it will decrease the accumulated fund. However, since we are asked particularly about the current year and we know that we are earning $2,000 of surplus, so it's better that you just stick to that the surplus of 2000 will increase the accumulated fund by $2,000. So, now we are done with this question as well, right? So, that's it for this video. I'll see you in the next one with question number 3.